What's up? What's up? It's Ronnie G. I'm back. Back with another webinar, Wednesday webinar. Thank you for logging in. We're finna get here. We're finna get started here in a little bit. Today, I'm going to be discussing entry and exits. Kind of got undisciplined here lately, and I made some bad entries, and I had to go back and look at my notes. And so when I went back and looked at my notes, I noticed that I was doing something that I normally don't do. And we're going to talk about that today, mainly with the entries. Now, the stops, really don't have too much to change on the stops, but I was like, what the heck? Might as well talk about the whole trading plan as far as getting in and out of a stock. So I want to discuss that. Now, as y'all know, we always want to do our analysis on the overall markets. And so I'm going to start with that. Today, we were green in the beginning. We were definitely green. And then later on in the day, kind of fell over, tipped over. Let me go ahead and look at 1 year chart. So like I said, we started out good today. On the green side, all these were green. And then, it just got real slow and choppy. I'll say around 11, 12 o'clock. It just started flipping the script, and it went left from there. So this dropped down. We see the resistance right here that we drew our technical analysis line. So this is our trend line resistance, but it's still supporting this previous resistance, and that's a good sign. We're looking at the S&P 500. It bounced right here 2 days ago. Yesterday it was green, and today, even though it was red, it still closed near the previous day close. So the previous day it closed at 28.16. Today it closed at 28.13. So not too bad. Still, ended off red. It's a little choppy. So looking for a rally here. And then yours truly, Russell 2000. The Russell 2000, we see that. I'm really not too concerned about this red day because we have a doji here, a doji candlestick, or that could be a spinning top. Like I said, you can find those in our album. I do have the candlestick patterns in there, so you can go ahead and check those out. The candlestick patterns, you can see spinning tops, doji, hammers, stuff like that. Spinning top is actually not on here, but it looks like a spinning top. So you can go ahead and look at that. This reminds me more of a spinning top than a doji, just because it wasn't as neutral. It is a green candlestick, by the way. It's not going to show as green because it didn't close higher than its previous day closing price. So the closing price yesterday was 165.87. This one was 165.76, even though it closed higher than it opened today. Today it opened up at 165.7, and it closed a little higher. All right, 6 cents to be exact. So we have that going on. It's looking like it wants to rally. We'll see. Tomorrow is going to be the determining factor for me. If I want to go ahead and start trading small cap, I still have some lined up. I'm going to look at some stocks later on in the day. But as far as right now, I'm not sure. I'm not sure. It's choppy. Choppy week. And we're going to see if it can bounce and we can get a clear rally. I don't want to start trading until we get a clear rally, which I want to discuss on, some of my previous trades that I've made. And I've made some bad decisions. So I'm going to go ahead and apologize for that, because if I'm going to be the leader in this thing, I want to lead right. And I want to apologize to those who have been, kind of following my trades. I want you to be self-sufficient, but I also want to make corrections. And look, when it comes to being wrong, I'll be the first one to say, hey, I was wrong on that. And that's what has kept me in this game. Not hoping and wishing that the stock would go back up. If I'm wrong, I'm getting out. I got my stop set. Sometimes I'll get out before my stop is even hit. If I need to, but I will admit that I've been wrong on these entries. And I want to go over these entries. Let's go to the post. I want to go over, we already went over SGYP. I want to go over DURS. I want to go ahead and look at that. Let's look at DRUS and see what it's done today. Now, today, it was green, but it was red. And it's filled in. So, with that being said, I got in, I want to say I got in on, what day did I get in? I got in on the 31st. So I want to say it's this day. No, I got in yesterday. Yeah. Yesterday I got in and I got stopped out the same day. Now that normally doesn't happen because usually I get in afternoon. And I didn't do that. It actually hit my buy order early in the morning. And I hate that it did that. So now I have to go back to the fundamentals, my rules, my personal rules. I have a rule that I only trade in power hour. Now, for those who don't know what power hour is when it's the last hour before the market closes. So if we're talking about Central Time, you may be in a different time zone, but we're talking about Central Time. That's 3 p.m. for us. So at 2 p.m., I'm looking to go ahead and place my trade. Well, I already placed my trade early the night before. And guess what? It got me in around when the market opened, when the market is real choppy. I like to play power hour because, note this down, because it gives me a clear view of what the stock is going to do, whether it's down on the day or whether it's green on the day and it's up. I have to see what it's going to do. Then I make my decision to place my trade, go ahead and take that risk, roll the dice. But looking at DURS, you can see it bouncing off the trend line. We have our trend line right here, and I want to go ahead and fix that up a little bit so we can see that. So we have our trend line right here, and we see that it went up, dropped back down, pulled back, rally back up, pull back down, and we have this dip. I was trying to buy the dip, and I bought in too early. I have to wait until I see a clear rally, and I didn't wait. I was undisciplined. So I apologize for that for those who are following my trades, which you should look at the examples. I'm not going to sit here and tell you, don't follow my trades when you're a beginner. Follow my trades, but get in the habit of doing your own analysis. Make sure you do that. Nothing wrong with, examining my trades, but as far as following, you don't want to be a follower the rest of your life. You want to examine yourself. But I still have to apologize for that. I don't want that to happen again where I'm getting undisciplined because I don't like losing money. It was like $100 loss, $135 loss to be exact. Cool, whatever. But still, I don't like losing. I'm very competitive. You should be very competitive as well. Going forward, I have to be more disciplined. So we're going to talk about entry. So when should I have got in? So usually I draw my pyramid, and this time I didn't. So what is a pyramid? It kind of gives me a basis of when to get in, when to get out of a stock. So, for example, if we're talking about stage twos. All right, so we got our stage one, and then we got the stock in the stage two, and I'll go ahead and draw it up on here so y'all can see it. Take my time. I ain't gonna go too fast. So we got a stock in stage one, and then it breaks out. Stocks break out, it pulls back. So now we have these pullbacks, higher highs, higher lows. Well, now we got a stage two, right? That's how it looks. I'm getting good at this artist thing, man, I tell you. So what are we doing? We were buying the dips. Now, some of y'all know I like to buy the first pullback. So when the stock breaks out, it always pulls back. I like to buy the first pullbacks because I like to catch the beginning of the trend, and I need to see if it's going to confirm the bounce right here on this basically on this trend line the stage 1 support, which was the resistance, but it broke out. Now we got a new trend right here. I like to buy right here. Now, what do you mean by pyramid? And why is it just doesn't want to act right? I'm going to go ahead and zoom in on 6 months. Maybe 3. Let's do 3. Let's do 3 months here. See where we can get it. So, okay. Let's see if I can get it closer. No, I can't. Let's see if I can do it like this. There we go. All right, that's as close as we're going to get. What do I mean by pyramid? Well, yeah, buy the pullback, but I like to buy when it's in a sweet spot. So what do you mean by sweet spot? The sweet spot is like the middle. It's the middle. Let me do that again. I ain't like that one. It's the middle. The middle of the rally. When it's going up, that's the rally. When it's going up, that's the rally. When it's going up, that's the rally. Now, that sweet spot is a little bit too small. Sweet spot. I'll redo that one too. Or like right here. Sweet spot. I like to buy the sweet spot. Not at the very beginning. And I got away from that. I don't know why. I probably got greedy, man. That greed can really play on you. So the sweet spot is when it's already confirmed that it's rallying up. It hasn't reached this yet. So when you reach the sweet spot, you want to capture 10% right here, 10, 15, 20%. Right now, the market is shopping, so 10%. Taking that and being okay with it. Now, this may be the sweet spot right here, maybe, 20%, but capturing 10 and getting out. But it's already rallied. So, like, just to get back to the point, I like to draw a pyramid for when it's already reached this high. I'm drawing circles and circles. I'm tripping. So the pyramid is a line, a resistance that I draw from when it bounced, and it has some highs right here that it has to break before I buy it in the sweet spot. So, like, for instance, this right here, that's a sweet spot. So I want to buy above here when it's already clearing the rally, which usually is after the first or second green candlestick, depending on what type of stock it is. It can vary because some stocks like this stock right here is very volatile. So, like, if I was to buy above here, that 10% is already right there. That's 10%. That's 10% right there. Right here, it's dipping, but buy wherever it touched on the line, buy above its high or above its closing candlestick. Or in this case, it's a red candlestick, so above its open. You know what I mean? You can see the example. It's a resistance right here. Buy above that. Capture 10%. You can easily capture 10% on this in the same day, actually. But for being more realistic, this is a highly volatile stock, so I have to use another example, but you get the picture. The pyramid, all it represents is this, where it's basically bouncing. It creates this V right here. You see that V? Creates that V on the bounce. I want to find the candlestick that it touched on, and I want to buy above its high or above its close if it's a green candlestick. Now, if it's a red candlestick, then that will be its open or its high of the day. Same thing right here. If you want to zoom in again right here, wherever its high is, and it creates a V or a pyramid, upside down pyramid. And we buy above here. And we wait until it gets in the sweet spot, the middle spot, and we buy. We buy and sell within here. We buy and sell within here. And that's, what I'm getting back to, and I want to apologize because I've been like buying too early. It ain't even hit yet, and I tried to buy yesterday. It ain't even touched yet. It ain't even in the clear rally. It's not even going up green. So that's the second candlestick in this case. Got to do better. That's all I can say on that part is I got to do better. And I have to stay more disciplined to that. So being more patient is going to play a key in that. Not thinking, oh, well, you know what, I'm missing out. I'm missing out on a trade. You're not going to miss out. You're going to catch that 10%. 10%, you'll catch it. Trust me, you'll catch it. Just being patient, being disciplined, not saying, all right, I need to get in now. I need to get in now. I need to get in now. No, chill. Let it get to the sweet spot. Boom, pull that trigger, buy, sell, out. Whether that's 2-3 days, whether that's 5 days, buy, sell, get out. Not being greedy and allowing that to accumulate the cash that's in your account. So that's what I wanted to cover. Now, the stops in that instance would still be somewhere, wherever it touched. All right, for example, I'm going to zoom back in, give you the drawn up example. So we can set our stop right here, 1 or 2% below this line, below the trend line where it touched. You can put your stop right here, exactly right there, or you can put it a little bit below it. But that's where your stops will go. You set your stop order. And I wanted to cover that. Let me put in my jack. There we go. All right. I wonder if y'all can hear me better now. I didn't have my mic in. Yeah, so that's what I wanted to cover, like focusing on the sweet spots and not getting too undisciplined to play anything else. Just because it's not there yet, it's never going to reach a sweet spot, or I might miss out. This might be the bounce, because sometimes stocks, start to rally before it touches this line, but usually a strong major trend, which you should only be trading strong trends. If you get in the habit of only trading strong trends, then you'll get in the habit of winning. And what is a strong trend? A strong trend is when there is 2 or more touching points on the trend line. So we drew our trend line, and you can see this one is not touching. That one's touching. That one's touching. We have 2 touching points. That is a strong trend. And if we get in the habit of that, taking that, then we're good. We get in the habit of only trading strong trends. Now, you can even add a little more to it. I want to go ahead and remind y'all of a good website that you can use, a good source. And now this source is what I used to use to find the strong sectors. What is a sector? Sector is the category of a stock, whether it's, tech, whether it's, information technology, whether it's financial, healthcare, these right here. And I used to use this a lot. And so now I'm getting back to what was working, and I kind of got away from it because I started winning over and over. I just started winning more and more and more. So I got away from it, got to get back to it. Things are going to be good from here. I'm going to speak that because I got away from what was working because I was winning on what was working, and then I kind of slipped up and started missing some few things. This is why you got to be very disciplined, because if you're not disciplined, then you might miss a couple variables, but you need all the variables to usually be there. And when you get that winning percentage going, when you start winning more and more and more, that confidence builds up. But we got to stay humble and continue to use the things that have worked instead of getting outside of that, because we winning and we feeling good. So it's like a continuous battle with yourself. And I'm learning that more and more and more. it's a battle with myself, and I have to keep it in clear view of what I need to do. So I'm creating Excel sheets, whatever I got to create. I'm creating, you know, a Word document where I can look at exactly what I'm going to be doing, what I'm looking for, what I need to be reminded of. That way I can be meticulous and very strategic about my approach. And so I would go ahead and note that down. If you listen to this, note that down. You got to be very strategic. Write it down. Write your trading plan down. Set reminders on that trading plan on your phone before you get into a trade. Look at this. Look at that. Is it doing this? Is it doing that? Talking to yourself, you know, on what's working. And that's what I'm getting back to. This is what works. Buying in dips on a confirmed rally in the sweet spot, gaining 10%, aiming for 10%, maybe 15, 20 if the market is really good. But it's choppy right now. It's bearish, bullish. So 10%, taking 10% and grow that account. 10%, you may hear that and may be like, oh, that's not a lot. But long-term investors, when they invest in stocks like Netflix, Facebook, those big companies, guess what? Guess what the average return is? 2-3%. So you're making 10% on your money in a couple of days or a week or two. That's really good. And we know how that calculates. We know how 10% of $10,000 is $1,000. You make that in a week, a couple of days, that's really good. So don't get greedy. Be smart. Be strategic. Stick to the plan. Don't be like, ah, man, it's only 10%. I can get more. No, take that 10, get out. Get out. Do that. It'll work. I had to go back and look at my old notes on my phone because I just got outside. Man, look, everybody does it. I'm human. And I can admit to my faults. So getting back to what was working, getting back on this win streak, being strategic in this market, not playing small caps when the IWM is not in a rally. Same thing applies. If it's not in the clear rally, I'm not trying to play it. I'm going to sit back and chill. Now, if it's nano cap, I need to see a clear rally. Those things are super volatile. So I need to see clear rally. This right here, boom, clear rally up here, take 10%. Take it. Get out. Don't say, oh, I make him get 20. No, scratch that. 10, consistent 10. Because if you do consistent 10 with your account size, you can grow it and grow it and grow and grow it. And the bigger your account get, that 10% starts increasing too. So that $1,000 turns into $1,200, turns into $1,500, turns into $2,000, turns into $3,000, $5,000, $10,000, etc. So that's what I really wanted to cover. Like, that's pretty much it. Like, that's simple as it can get. So I'm going to do 5 minutes, basically 5 minutes of straight, you know, Q&A on that. Or if there's anything else that you're having problems with, go ahead and shoot the questions now. That's what I wanted to cover. That's it. I wanted to cover it because it's very important. Like, you got to have the trading plan. You got to know what's going on. You got to be able to examine that. Take that 10, only trade the sweet spot, only trade confirmed rallies, because that's going to increase your winning percentage. Always set the stops. Never lose more than 5% of your total account equity on one single trade. One single trade. Don't do it. And just don't do it. Just don't do it. Also, I wanted to say I almost lost my train of thought, but if you win more than you lose, cool. But make sure you always profiting more than you take a loss. So if you're taking $100 losses and then you profit that 110%, and just say you lost 3, won 1, you still in the green. So focus on making sure your profits are always bigger than your losses by setting your stops. Now, if the stop is down here, like on the trend line support, like we talked about, and it's more than 10%, like that, if you got stopped out right there, let's just say it was more than 5% of your total account equity. That means you need to reduce your share size. You need to reduce how much money you're putting in or buying the stock. So instead of using $5,000, you might want to use 3,500. Get it down. Make sure you're not losing more than that, your total account equity. That's going to help you out. Size down a little bit. It's okay to size down. It's okay. And that's pretty much all I wanted to cover on that. Just a overview summary on, you know, what's working and then what's not and what's not going to work. But go ahead and shoot questions. I'm here for them. I'm here for the questions. If you don't have questions, then I will see you tomorrow when the market opens back up, because it is going to open back up and it's going to keep going, and we're going to keep being successful, and we're going to keep growing our accounts and getting to a new height. Look at, I'm going to look back. Yeah, FinViz. Matter of fact, let me go ahead and send that. Let me go ahead and send FinViz to y'all. Let me go ahead and send that in the chat so y'all can have that. Might want to favorite that in your browser. Whatever you own, favorite that. The link is in there. It's going to be good for y'all. Any questions? Was going to go to one of my stocks, one of the other plays, SGYP. SGYP was another example. Let me go ahead and go over that. At the end of this video, save the best for last. So, as y'all know, if we look back at when I got in on the 2026. So I got in on the 26th, and that was on this day because I thought it was finna rally. Being impatient. Dropped down 2 more days. I got stopped out the next day. I believe so. And then it's starting to rally. It's finally touched. You got to touch. But it got to be a clear rally. Like, I was thinking about buying today, but look what happened. I waited until the power hour, and I'm like, no, I'm not going to retrade that. It couldn't even hang. So let's see what it does tomorrow. If it can do this tomorrow in a choppy market, then this is considered a strong stock, and I'm willing to trade it. I'm willing to trade it. I'm willing to replay it. I'm going to treat it just like a new stock. You can do that. But I need to see a clear rally because I can take 10. Look, I can take 10% on this. Like, if it gets in a clear rally, you got your pyramid. If it gets in a clear rally above this, 10% is right there. Boom. I can sell at 192, 191. I'm good. Bam, get out. Make a quick 15. However much I use, I can make a quick buck. And that may take, you know, maybe 3, 4, 5 days. Cool, whatever. But I'm looking to replay this. It has to be above this. It has to be in the clear rally. It has to be. And I'm trading in power hour. So power hour is going to let me know where it ends. If it can close above that and end off green, I will buy. I will buy, you know, somewhere 230, 240, between 2:30 and 3 o'clock before it closes. So I'll have my order saved already where I want to get in. And then obviously I can just pull out that save order, look at my phone real quick. If you're at work, you know, go to the bathroom real quick, just pull out your phone. If you're doing hard labor, set a reminder, vibrate on that phone. Just say, hey, I need a minute. All it takes is 1 minute. Not even that. If you got it saved already, boom, send, see what it's doing before you send it. If it's clear above that rally after 2:30, I'm not saying that it's going to close below that. And then you just wait, set your make sure you set your goal and your stop order, and then you're good. You set. But make sure it's in the clear rally. Got to confirm that first. I wasn't confirming that. Got in on this day, not even touching this, not even bouncing. not even in a clear rally. Should have waited the next day before a confirmed green. So I used to wait for the second green candlestick, like right here, to confirm that. And I used to only buy between 2 and 3 o'clock before the close to confirm that it is closing green and I'm not getting to a stock early in the morning, afternoon, and then it closes red on the day. Now I'm stuck in a BS stock that doesn't want to move. That's bad for business. So, I mean, that's pretty much entry, exit. Like, that's what you got to focus on that strategically. You really do. And you can always go back to this video and watch it. Like, that's why I'm always recording. I can go back and watch it because I know what's working. I have the results and I know what works. I just got to keep doing it. Sometimes, like I said, we get above ourselves and we like, all right, I'm winning. And then you get kind of lackadaisy and you just started doing stuff. That's what I was doing. So glad I caught myself. I'm glad I did. You have to do that. You have to catch yourself sometimes because what's working may not even always work. Got to examine, make sure that, all right, is this still working? But this is simple strategy. Buy the dips, but buy the confirmed rallies, buy the sweet spots. If we go back to DURS, buy those sweet spots. I drew it up on here, stage 1, boom, new trend, dip, pullback, buy the sweet spot, rally, dip, buy the sweet spot, make sure it's confirmed, rally, dip, buy the sweet spot, make sure it's confirmed. Point blank, period. Simple. All right, so I'm going to take it as nobody has any questions. I appreciate some of y'all don't like asking questions on here. That's cool. Keep sending the questions in the band app. Go ahead and just, ask questions and I will respond. I usually respond pretty fast. And like I said, if you're sending me some type of stock idea, some type of trade idea, make sure you send me your analysis first, whether it's on your phone, screenshot it, whether it's on your laptop, go ahead and screenshot it up here. You can take a screenshot right up here and send it to me so I can see your analysis and your thoughts and I can help you. Other than that, man, y'all be blessed. I'm going to see y'all tomorrow. Entry, exits, trade plan. I'm pretty sure I covered everything. Go back and look at this over and over and over if you have to. But I appreciate y'all. Love y'all, man. See y'all tomorrow. I'll be sending out morning texts. And then we'll be looking to see what the IWM is going to do. If the IWM is going to start to rally, then I'll look at some small caps. Until then, it's nano for me. I'm not, just because I took 2 L's back to back on nano, I'm not really tripping on that. Small losses, bigger wins is the goal. So, all right, I'm going to holler at y'all tomorrow. Peace and blessings. See y'all.